So I'd like to introduce the participants for our next session. Michael Gray and Neil Adshed, who will be going head-to-head in the debate. Is there luck involved in mineral exploration and making discoveries? And for those of you who are just joining us, I'll start with the bios. Michael is equity mining analyst and partner with Agentis Capital. He's a geologist by background, and his experience includes 10 years with senior mining companies and co-founding a junior mining company. For the past 18 years, he's been a sell-side analyst, including 9 years at Macquarie Bank. Neil, on my far left, has a PhD in geology and has worked for 12 years for Placer Dome, including international field work, and ending up as an advisor to the global VP of exploration based in Vancouver. Neil then moved on to the fund management world and was an analyst with Passport Capital for 10 years, followed by an analyst and fund management roles with Sprott Inc., and over the past 9 months has been consulting to some buy-side funds. So please join me in welcoming Michael and Neil.
Thank you.
Thank you.
Gentlemen, thank you for joining me. So let's begin. Is there luck involved in mineral exploration and making discoveries?
I'm going to take the yes side, just to be clear.
And I'm definitely taking the no side.
Doctor, no.
But I will, we've had this discussion for years, several geologists on and off. I must admit at the start, I'm on the spectrum of rationality, I'm at the extreme end of rational. That's not necessarily a positive attribute, but I'll warn you before we start, that's really where I'm coming from.
Okay, well, and I've interacted with Neil over the years. I've been on the sell side almost 20 years, and Neil, same time. One of the smartest fund managers I've come across. But you're wrong on the luck, Neil. There's lots of examples out there. The Granny Smith deposit in Australia. The field assistant that was supposed to shut down the RAB drilling program fell asleep. And all of a sudden they extended the RAB lines out a few extra 100 meters, maybe 600 meters, and voila, they found the Granny Smith deposit, which is a core asset.
Okay, so luck is quite a complex topic. I'm sure there's been anthropological PhDs on what luck means. Luck's been this human belief, if for want of a better word, forever. Apparently the Romans had a goddess of luck called Fortuna, which is why we have the word fortune and unfortunate. So it's been around forever. Now there's various ways to consider luck, but I'm just really coming at it from my point of view. I'll call it the extreme rational point of view. Other people believe in luck, other people believe in superstitions. As a kid growing up in Manchester, my mother was quite superstitious, and she'd make me do all these crazy things that, she'd drop a knife, she'd shout me into the kitchen, I'd go running in thinking the gas stove's blowing up, and all of a sudden she's dropped a knife on the floor. And she said, "You must pick that up, it'll bring you good luck." So as a kid, I was exposed to so many of these things. Would see one magpie, it was bad luck. Two magpies, it was good luck. Throwing salt over your shoulder. All these, to me, they're stupid superstitions. But some people believe in them, and that's fine. So as a kid, you grow up, you're reading all your fairy tales. It says, well, to make some money, to make money in life, you have to like go and seek your fortune. So as soon as I was old enough, I left Manchester, went to Australia, worked in Papua New Guinea, Canada, came back to the UK quite a few years later. And I've sort of explained to my mother, obviously been speaking to her along the way, but here I am, 40-year-old, done okay, and she says, "Oh, you're so lucky." And I was like, and it kind of, from that concept of somebody describing how I turned out in life as being lucky, got me thinking more about luck along the way. And obviously you hear luck all the time in mineral exploration. Now there is to me it comes down to probability. Now people could say you were lucky from, to use a Warren Buffett phrase, the birth lottery. I was born white, I was born male, I was born English speaking. I was born during a time where any of my ancestors in the English race I probably would have died in a war or died in a mine. So there was some good fortune, if I want a better word.
Was it a fluke?
In the birth lottery. No, it's just a birth lottery. That's exactly what it was. So from my personal point of view, I was given certain benefits, I suppose. I started on a relatively high platform compared to most people in the world. But it's certainly, there's plenty of my peers who are stacking shelves in Woolworths right now. And some people might say, oh, they were so unlucky. It's like, no. I think there's millions of little, thousands, hundreds of thousands of little decisions along the way which get me exactly where I am today. Some of those decisions were poor decisions. And a big part of that, of getting where you are, is actually being successful, let's say. I'm not saying I'm super successful. But is, if you make a bad decision, is to realize you've made it and try and change it as soon as possible. And there's been a few studies on, I'm kind of going off on a little tangent here, but good portfolio managers, the best portfolio managers over time, are not the ones who pick the best stocks. They're the ones who, to use a Mancunianism, who pinch off the turds as soon as possible. So when you make a mistake, you realize you've made that mistake, and you sell a loser when you're down 5 or 10%. How many of us have bought a stock, you're down 10%, you're like, oh, I'm not sure about this. I'll just wait till it comes back up to $1, back up to where I bought it. Blink of an eye, it's down 50%. You're like, oh, crap. Now it's too late. Now I'm over it, and then it's down 90%. So the best portfolio managers don't do that. They make the decisions, and people will say, oh, you're so lucky. The best portfolio manager is so lucky. Like, no, it's all about them making those decisions, lots and lots of little decisions every day. Sorry, I'll let you speak.
No, it's important to have that.
We'll bring back to mineral exploration, and I'll throw one question out right now. You
Okay.
don't need to answer it. Is Robert Friedland lucky?
I think on some levels he is, because he didn't know on Voisey's Bay, when he was funding his prospectors for diamonds, that they had actually had a secret agenda to go to a rusty outcrop. If you read The Big Score, you'd realize this wasn't serendipity of looking for diamonds and flying past an outcrop and realizing maybe we should check that out. If you read that book, they knew what they were doing. They went and sampled an outcrop with copper nickel mineralization, ended up going to Robert Friedland through the Archean Prospectors in terms of the company name. And I think Robert was quite lucky that he had the company with those prospectors doing that work that actually had a secret agenda to check out that outcrop. And $4 billion later, fantastic negotiation, no question about it. Fantastic, mesmerizing the world, taking his shoe off and hammering it on the table with the Inco executives that kind of stunned them into silence and played Falconbridge off Inco and back and forth. So I think Robert was very lucky with Voisey's Bay.
Okay, so how can one human have 4 amazing tier 1 discoveries? And you could also argue he's also probably the greatest salesman the mining industry's ever seen.
Yeah, it's not all luck. He hires exceptional talent, and he drives people. If you're working for Robert Friedland, according to anecdotal comments from various people, he drives them really hard. So he gets as much as he can out of them. He phoned them at any time of day. He talked to Rosie Moore, and she was constantly being phoned when she was on the drill rig at Voisey's Bay. He's got a photographic memory. I think that helps him. He can talk to anybody technically and challenge them.
100%. So this is Robert making decisions, hiring the right people who then, big part of exploration, big driver at the start of exploration is area selection. You're not going to find a big deposit if you're looking in the wrong rocks.
Well, I would argue the wrong rocks were potentially in Labrador at the time. No one really had. Falconbridge had a few targets out there. Scott McLean's here somewhere.
No, Scott's there. Target number 17.
Was it 17 or 14?
I was remembering telling me.
Yeah. 22 unless otherwise Falconbridge eventually get there, and Scott and I worked at Falconbridge together. So Ian Telfer, he took on Wheaton River. I think it's a $2 million company. Maybe it got to 20 fairly quickly, and that he took to $2 billion, and then they took over Goldcorp, and it went to $20 billion. They eventually became the largest gold company in the world by market cap, not by production. And when he got, interestingly enough, an award from the Lifetime Achievement Award from the Fraser Institute in Vancouver at the age 70, he said, I can't believe that I didn't have any success really in my career until I was 55. That's when he formed Wheaton River. So I think timing's everything, and he had some luck. He actually had an outlook for a higher gold price. They did one acquisition on some struggling assets in Mexico with Lewisman, and it made the company. It became a darling. They were aggressive in M&A. So I think he got a little bit lucky, to be honest.
Yeah, okay, I'm going to go back to Mr. Friedland. So people have analyzed why Robert Friedland's been so successful. And it's not because he rubs a rabbit's foot every night and goes hunting for four-leaf clovers on the weekend. And the conclusion, this was by quite a smart guy who spent a lot of time thinking about it. And he said Robert creates what he calls super juniors. And he says it's a junior that's got a $100 million balance sheet. And it hires the best people. My problem as a fund manager with most juniors who pitched to me was you don't have enough money to do what you're trying to do. And then they'll flip it around and say, well, give me some money. That's your job. And it's like, yeah, but I don't own 50% of your company. You need $20 million to do what you want to do. You've got a $10 million market cap. You're going to raise $2 million. It's not enough. It just doesn't, you're not going to be successful. Robert's the best. Robert probably has a negative cost of capital. He can go to New York, he can go to Hong Kong and China, and he can come away with $200 million. There's not many people in the world who can do that. He really is Robert's skill, apart from being a smart guy, is being able to raise capital at incredibly low rates.
Yeah, probably the best presenter and hand-to-wallet individual in our business.
So he knows what he's good at. He's good at raising money. He's good at telling the story. He's good at getting people to believe him. But he also realizes the real value in his business is the geologists. So he hires some of the best geologists. They go and pick up very large land positions in prospective rocks, looking for big mineral systems. He's not looking for piddly little gold veins. He looks for all his discoveries have been, when you look at them, essentially base metals.
So pulling this back away from Robert Friedland to the Craigmont skarn deposit in BC, the geologist went to the bar, had too many, was supposed to go to the drill and shut it down at midnight. Came back in the morning, they drilled an extra 150 meters, and there's the Craigmont massive chalcopyrite, new discovery. Hole's supposed to be shut down 200 meters or so ahead of that time. I think that was lucky.
No, that's what I would call a fluke. So people use the word luck to bridge. And so this is interesting from my point of view when people come to pitch to me, or they have pitched to me in the past, and they say, I need a bit of luck to find something. It's like, no, you don't. Don't say that. Because implying you need luck implies to me you're not in total control of what you're trying to do. You're relying on some voodoo concept out there that, you are going to keep buying Lucky Charms, and, you think there's certain things you do, you don't walk under a ladder. Well, if I walk under that ladder, I might not find a discovery. It's that logic I don't like. You should come to me. And there's been interesting studies on the concept of luck. So when people come to me and they say they're lucky, I actually see it weirdly as it's kind of a two-edged thing. I don't want them relying on luck. I don't want them thinking, I need some luck to make a discovery. It's like, no, you don't. But on the flip side, they've done studies on golfers. And if you give a golfer a ball and you tell them this is a lucky ball, they generally play better. So believing you're actually a lucky person makes you optimistic and enthusiastic. And one thing you need to be as an exploration geologist is optimistic and enthusiastic, to go out there and believe you're going to achieve this incredibly low probability event, and that's what it is.
Can I do one more comment? Okay. Well, the other day, I think it was Sunday, I talked to an authority sitting right there in the third row, Ron Burdall. I asked him, is it luck or not involved in mineral exploration? And he said, after hesitation, it's all about luck and persistence. So, iconic superstar prospector in the Yukon.
No, I think luck is a bridge. It's like a bridge that people use to try and explain low probability, almost unpredictable events. The chance of drilling that. So, I could ask you: is Scott Burdell lucky? For example. It's like a crutch. It's a way to try and explain. Humans really struggle with low probability events. which is why it's why the gambling industry exists. It's why you'll never see a poor bookie. It's why the gambling industry makes tens of billions of dollars a year. It's why the insurance industry is amazingly profitable, because we struggle, we can't value risk effectively. I hate insurance. That's my wife. We're constantly debating about house insurance. I absolutely hate it. Anyway, because the chance of the house blowing up is incredibly low, but we're paying thousands of dollars a year for that. And anyway, that's kind of another. But it is about valuing. It's trying to understand the value and the probability of low probability events. And mineral discovery is incredibly low probability, and humans struggle with that inability to forecast the future. So when something weird happens out of left field that was a fluke and you couldn't predict it, like, oh, there must be some amazing. And just that morning, they'd not walked under that ladder, or they'd rubbed their rabbit ear. They make that connection between that action and the outcome and say it must be causal. When it's not, it's just correlation.
Thank you, Neil. So pivoting on this a bit and touching on what you've sort of referenced in the past 20 minutes, which is more important, management team or asset quality?
Well, I'm going to take the asset quality side in terms of my need to portray to fund managers opportunity for returns in the short term. If I've identified a project that is special, best of breed especially, that could have torquey drill bit results, I will focus on the asset initially, and then if management's subpar, hope that they get replaced.
Yeah, that's probably a good way to think about it. Yeah, but when I'm in a meeting, so I'm meeting a group for the first time, for me, it really is all about the people. If I'm sent a pitch, the first thing I look at is the biographies page. I don't look at the geology. If it's a bunch of, use another Mancunianism, if it's a bunch of Muppets, I don't care what the deposit is, because they're more than likely going to mess it up. And one thing I always never wanted to be as a fund manager is embarrassed by something I'd bought. I've seen many good management teams with mediocre projects do a great job, and it results in share price performance. And I've seen some pretty mediocre guys mess up a decent deposit because they weren't very good at it. So that doesn't really put me either side on the fence. Sometimes you just see a deposit as a geologist, and you're like, oh my God, you've seen that. I've seen it maybe half a dozen times in my life. You go on a site visit, Fruta del Norte was like this. Or you go and see hot marden in Turkey. Even Darwin's deal in Alaska there, where you first see the core, you're like, oh my God, look at that. You're just like, this is going to work. You have to back it. Then you kind of, as you say, if the management are absolute idiots, you can, as a big shareholder, you can change that later. So it didn't really provide a definitive answer. Both important. Yeah, but for me, first thing I look at that pitch is the people. And many people know I have a big database of people. I don't have a database of projects.
8,000 people.
I have 8,200 V cards in my little flat file thing. Lots of people in the room. I've got a V card on you. I'm not telling you what's in it, but yeah. Including you, Lise.
So be careful with my next question. So should analysts be allowed to publish resource estimates?
Well, you can guess my view. Given that we've published on a few, we've published on mineral inventories. We're careful not to use the word mineral resource. We've done the same thing with GT Gold. We've done the same thing with Imperial and Newmont's Red Chris discovery before it had a resource, the far east ridge zone.
Yeah, this question came up when Mike and I sat through Scott Bedell's presentation at an Geoscience event a few weeks ago in Vancouver, and I sort of sat there, thought about it, and I thought actually analysts shouldn't be allowed to publish a mineral resource estimate or call it a mineral resource estimate, because companies get raked over the coals, and you have to spend tens of thousands of dollars on a technical report and all these other requirements you have to go through. Whereas an analyst, and to be fair, most sell-side analysts today don't even have a geology degree. They're coming out with this big flowery number and then designing a mine plan on the back of it. And the sell side, again, apologies for my cynicism, the sell side are paid to blow smoke up the arse of the issuers because that's how they get paid. So you're seeing these resource estimates coming out of analysts. Oh, this thing's got 7 million ounces. And I'm not talking about Snowline. You know, you've got 7 million ounces, whatever, but there's no recourse whatsoever. And it's just investors are seeing that and buying the stock on the back of that, whereas the companies get rates over the coal. So I don't think they should be allowed to publish whatever they.
I partly agree with you, but I think the value is for a good estimate is when in the market, and Snowline was subject to this, there was a 50 million ounce arm wave. There was a 30 million ounce arm wave by a Twitter X guy that actually does resource estimates or had done them in the past. And then we were sitting there, we kind of had a background, 8 to 10 or something like that. But we outsourced it to a QP, Whittle Pit, properly did it based on the drill hole database that was out there, 10 kilometers of drilling or so. So we felt we could defend it. And reputationally, obviously, we didn't want to do something stupid. But, I understand your point.
Did you get Scott's permission to publish that?
Okay, so we do have a few minutes left. Do you feel like taking some chances? Opening it up for a lucky dip. Anyone from the audience have a debate question to throw to these?
Darwin's grinning here. I think he might have a question.
Yeah, sure. Any questions? It can be on anything whatsoever. Fund management, geology. Sue?
Okay.
Yeah, it is. Mm-hmm. It means something to different people. So and I tried to say that at the start. My definition is this, and other people. Yeah. There is a spectrum of beliefs, and so I'm going to write a little essay on it from my perspective, and I'll publish it on LinkedIn in the coming weeks. Because Mike and I have been talking about this for quite a long time, so I'm kind of interested to write my thoughts down now.
Yeah. Sorry. Mark, and then Sue.
Post-Brexit, of course, the world changed enormously with the requirement for 43-101. My position is looking for projects in a mining company. I'm not sure whether it's been a good document or a bad document. You rely on information. What do you guys feel about the usefulness of 43-101, particularly if you don't have any technical background?
If you don't have any technical background, I'm not sure it helps you either way, because you don't know if you read a technical report, you don't really understand what you're reading. From my perspective, one of the positives of the Canadian Stock Exchange over the Australian Stock Exchange is the increased disclosure. That technical report, for all its flaws, it is actually quite a useful document, whereas Australians don't have to publish a technical report. They'll publish a summary of their feasibility study, which is usually a very long news release, but it's not got as much information in it as the Canadians. And I personally, and this was one of the questions we had on the list, and maybe I'll throw the question out there: should companies publish all technical data? And I'm specifically referring to drill data. My argument is yes. I'm paying for that drill data. Why are you not publishing all the holes of zeros? Or all the holes of low grades? So just attach a Excel spreadsheet, make it a CSV file, whatever you want, on your website somewhere, that I can download all that data, because it's my data, I paid for it. Why do you get to selectively choose what drill data I see and what I don't see? I want to see all of it.
Materiality.
To me, a zero drill hole is material. A drill hole with nothing in it is material. Sure, it's telling me you've got nothing there. So I want to see it.
Yeah, no, I don't disagree. I'll answer Mark's question from an analyst perspective. Because we can only work with the public domain information, I find them very useful. And some QPs go to town and put in all sorts of detail that's actually quite helpful, and you can leverage on a site visit. So they are flawed on a number of fronts, a lot of assumptions, things like that. But I do like them. I think it's been a good thing for our sector.
Sue?
That's a fluke.
Well, ending on that, I'd like to join me in thanking both Neil and Michael for this
Thank you.
exciting debate.
Thanks very much.
Good job.
Very good.